Hey everyone, welcome back to Corporate Decoder, the place where we read through corporate filings so you don't have to. Today we're diving into a report from Digital Brands Group, and let me tell you, it's a bit like finding out your friend who always borrows money suddenly claims they're rich. We'll see if their numbers back up the hype. Today's report is a Form 8K, also known as a current report. Companies use these to tell investors about big news that might affect the company's stock price. It's like a corporate bat signal alerting everyone about something important. This report is dated April 9, 2025, so it should give us an up-to-date snapshot of what's happening. The main reason for this report is something called Regulation FD Disclosure. This basically means the company is sharing information that could affect its stock price, and they have to share it with everyone at the same time. No insider secrets allowed. The big news here is that Digital Brands Group believes their stockholders' equity, which is like the company's net worth, is now more than $5 million. This is thanks to some recent deals, including selling more stock. To show this, they've included something called an unaudited pro forma condensed balance sheet. That's a mouthful. Basically, it's a simplified version of their financial report, adjusted to show what things would look like if all those recent deals had happened earlier. The report is unaudited, meaning that outside auditors didn't verify it. The report uses the numbers from their official financial report for last year, which they filed with the Securities and Exchange Commission, or SEC, in April of 2025. Here's that unaudited pro forma condensed balance sheet. Remember, this is not a real audit, so it is just the company's expectation of what things would look like if all their plans came to fruition. It's like looking at a blueprint instead of a finished building. In today's video, we're going to be going through how to read an annual report, or a 10K as the annual report is called for US businesses. First off, total current assets. Think of these as the resources the company can easily turn into cash within a year. This number is 16.4 million. This includes things like cash, accounts receivable, which is money owed to them, and inventory. Then we have total current liabilities, which is 11.2 million. Those are the debts they need to pay off within the next year. That includes accounts payable, salaries, and short-term loans. Ideally, we want to see this number lower than total current assets. Lastly, there's that total stockholders' equity we heard so much about. The report believes that would be 5.1 million. Remember, this is what's left over for the owners of the company after all the debts are paid, if we can believe this unaudited report. Before we get to the end of the report, it contains forward-looking statements. This is basically the company saying, hey, don't take everything we say as a guarantee. Things could change. They list a bunch of possible problems that could affect their business, like customers not wanting their products, issues with getting materials, or problems with their technology. It's good for a company to list these risks, but it's up to investors to determine what they believe. Now, let's put on our thinking caps and look at the bigger picture. On one hand, Digital Brands Group saying their net worth exceeded 5 million is good news and could open doors for them. Being able to say you have a positive net worth can help a business when they negotiate for loans or try to attract investors. It's like saying you have a good credit score. It makes people more willing to trust you. On the other hand, this report is only showing a potential situation and doesn't guarantee the company's success. Also, the future risks that the company included were pretty serious and are worth looking into. It's like a weather forecast predicting sunshine, but also mentioning a chance of thunderstorms. In conclusion, this report is a mixed bag. Digital Brands Group is trying to show everyone they're doing better, but it's important to remember that this is based on projections and not a guaranteed outcome. Investors need to dig deeper, look at the company's past performance, and weigh the risks before making any decisions. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more corporate deep dives.